All right. Good morning, fellow futures traders, part of the team here. Market prep time. My name is John Hoagland. Thanks for trusting me with your time. It's Monday, July. What day is it? June 26th. I got the 16th written down here. I guess I'm going back in time. But anyways, our focus is always on good context, good risk management, and remaining patient in our trading. I hope you had a nice weekend, a restful weekend. Party to go to on Saturday night. And other than that, did a lot of resting, relaxing, and researching a little bit over the weekend. What do we have facing us as far as economic numbers this morning? We have it at 9:30, the Dallas Fed Manufacturing Survey. Probably not going to be hugely impactful, but looking forward to the rest of the week, we've got quite a bit of information coming at us. Tomorrow, durable goods orders, Case-Shiller Home Price Index, FHFA Home Price Index, consumer confidence, and new home sales, all tomorrow. Wednesday, mortgage applications, of course, international trade, wholesale inventories. Our good friend Chairman Powell will be speaking at 8:30 Wednesday. That's Central Time. And then we've, of course, got the EIA Petroleum Status Report. Thursday, the final GDP. We've got jobless claims as usual, pending home sales, natural gas. And then on Friday, the PCE numbers that are going to be hotly waited for and viewed, of course, by especially our FOMC. Seems to be their most popular indicator on how things are going for the economy and for inflation. We also have Chicago PMI and consumer sentiment on Friday. So we do have a long list of things to look forward to this week. As far as this morning is concerned, we've got equities just a little bit lower this morning after a short-lived mutiny in Russia has been largely kind of ignored or muted by the U.S. equities markets. So we've got an inside week last week and an inside situation going on perhaps again this week. We'll have to see how that plays out. Again, we do have an active week this week as far as economic numbers are concerned, but we are coming into the Independence Day week next week. So probably some muted participation on Monday, certainly on Tuesday, when nobody will be trading on Tuesday. And then we've got Wednesday, Thursday, and Friday to see how these markets are going to treat us into next week. Crude prices have been kind of stable after kind of a feeble Russian coup attempt, shrugging off any potential political turmoil from that. So we've got our markets kind of relatively even, but range bound some possible changes coming up. We're going to see that in the charts here very shortly. As far as the VIX is concerned, it's up a little over 6% this morning, but still only at 1435. At this point yesterday, on Friday, it was 1344, so up about a point from Friday at this time. Dollar index down a little bit, 102.63. It was 102.8 at this time on Friday, and the yield on the 10-year slightly lower at 3.68%. It was 3.7% at this time on Friday. So no major changes as far as any of those are concerned, although that spike in the VIX, it's still only 14. How important and big can that be? But as usual, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. It is good to see everybody this morning. Futures trading today is the first one in the room, winning the prize. Rooster, shortly thereafter, already crowing this morning. Will, Stephen, James, Caprice, Shaw, good morning. Lacey says good morning to everybody as well. Charles, Mark, Theo, good to see you this morning. Casey, Fred Decker, always a pleasure to see you, sir. Alejandro, Josiah, good to see you this morning, my friend. Diana, it's good to see you. I don't know if I've seen your name before. Thanks for chiming in and saying good morning. Welcome to the Market Prep. Matthew, good to see you. Bill, Jason, John, Naztic. Where did I go here? I got lost. Denise, Grounds Hero, John Doherty, my younger, better looking, and smarter cohorts. Always good to see you this morning, John. Phil, JD, Travis, Robert, Scott saw and he conquered. Vince, my guy. Dimitar, good morning to you, Top Step. Kaylee, good morning. General, good morning. Chaz, James, JD, DA, Shaw, Rusty Golfer, my spirit animal with us this morning. Winthorpe also standing by. There you go. All right, Winthorpe. Chaston, good morning. Roland, Rajesh, and Midhan. Good to see everybody this morning. I'm going to put the link in for group coaching today, which is at 12:30 Central Time. Look forward to having you all there and hopefully being able to answer all of your questions. Nobody knows everything. I know I certainly don't. That's why I love doing those sessions, because I probably learn more than most. So we'll look forward to seeing you there. XX, say my name. Okay, you got it. All right, let's take a look at the charts here. We'll start as usual with the E-mini S&Ps, and we'll see what we are looking at. It's beginning the week. All right, so when we look at the monthly chart in the S&Ps, it looks pretty strong, right? The weekly chart, let's take a look at that here just briefly. Here's the weekly in the S&Ps. 1, 2, 3, 4, 5 straight up days, up weeks, and an inside week last week. So the market is kind of telling us that it is sort of falling into balance here, at least for the time being. Here's that daily chart again. So we had a pretty decent pullback last week, an inside week, indicating, potential adjustment of inventory. The market's been moving higher for a while. We've had a pullback. We had a breakout above a bull flag that did not bring a bunch of opportunity to the upside. The market's still evening out inventory. Where are we today? Well, we're testing last week's low, but the previous week's low is 43.4875. Well, guess where weekly kickoff low is 43.50, right around that level. So I'm looking for this market to maintain price above that level to continue upside structure. If we start to trade meaningfully below weekly kickoff low, I think we might be in for a deeper pullback. A lot of that is going to, of course, depend on what happens with a lot of the economic numbers and things we've got coming out this week. And don't forget, we are coming into a holiday week. A lot of folks will be kind of liquidating some of their positions, or at least hedging some of their positions, so that they can take a little bit of time off for the Independence Day holiday. Who knows what's going to happen, and anything can. As we always say, ACH, anything can happen. So what about the volume? It's been somewhat unimpressive. Open interest on Friday. We might think we may have brought in some new open interest when we didn't. The estimated is we lost approximately 500 contracts in open interest. So how good is this short time frame auction doing? We were mentioning it last week. It has not been performing well. It is not increasing volume. It is not increasing open interest. So I'm looking at this as more of an inventory adjustment than anything major as far as a reversal is concerned. Again, I would look for that down here around 43.50, our weekly kickoff low, if we get that opportunity. I'm calling the grade of this downside short time frame auction a C minus, kind of like me as a student. So it's just getting by, not doing all that well. Take a look at the 30-minute chart now. All right, so here was our bull flag. Probably a lot of expectations. I know I had expectations for a bigger upside move off of that, but it has not come to fruition. So what was resistance is to some degree starting to look like support. Well, what do we do? What do we do overnight here? We started the session here. We got too long. We got too short. We're right back to almost where we started with no gap and basically trading inside the value area from Friday, which, as you all know, is going to put me on my heels, on my seat, and I'm going to be looking for opportunities as the day goes on. I'm not, there's no real major change in the perception of value of an S&P, whatever that is. So we're going to stay patient. We're going to let the market establish an early range and focus on those extremes for our opportunities today. So again, the auction to the downside, while it looks good on paper, we've got lower highs, we've got lower lows. It has all the earmarks of a trend to the downside, but underneath, with lower volume and cutting off open interest, it is not performing well. Doesn't mean I can pick the bottom, but I will be looking for a reversal pattern to look for opportunities if this market starts to turn the other direction. Um, so, yeah, there's just not a big hurry to get into anything here. Now that could change between now and 8:30. If we start to break, we open with a gap, can't close the gap, then we might see continuation to the downside. We do have some space down to weekly kickoff low before I will start to think accepting below that we might be looking for more continuation to the downside. But again, the auction process not performing well to the downside. Here's the TPO charts. So Monday, Tuesday, Wednesday, Thursday, Friday. We put in a late spike on Thursday, which was rejected. We rejected that on Friday, obviously, with an overlapping to lower range and completely outside of value. So value continues to move lower, but how good of a job again is it doing? This is a normal variation trading day. Neutral stance. Its point of control is relatively close to the center of the range. We have excess at the low. We have excess at the high. Excess, low excess, excess. The market just kind of wandering to the downside. This little weak low here, obviously, we've taken that out. We left excess at the low here. We do see a little bit of excess at the low here. Overnight low is, of course, going to be something I'll look at. Overnight high is, of course, something I'll be looking at. But in the meantime, opening inside range and value, I'm going to stay patient. No, that doesn't help much for early opportunities, but in my time frame, using the 30-minute chart and the profiles, it says you might be better off being patient and waiting for an opportunity that may come later on in the session. Here's crude oil, which is just about to open. Range bound. Balance extremes seem a little bit even more defined with the high that we put in last week and the low that we put in last week and the low that we put in the week before that and the low that we put in the week before that and the low that we put in the high that we put in the week before that. So we're really kind of established in an area of range that price seems to be comfortable, and we're relatively centrally located inside that range. We had a pretty deep look below the previous weekly kickoff level, which was rejected. Now we've got more reference down at this area. Did we bring in a bunch of buyers down here? It indicates no. The open interest is a 2,300 contract loss off that low. Instead of bringing in buyers, short covering took over. So now where are we? We're in the middle of the range. In longer time frame opportunities, bigger opportunities, I got to be patient and wait for something to happen at the extremes. What I'll be looking for at the extremes is to use range bound / breakout rules. Range bound rules mean when you get to the upper extreme of balance, you short against it. You go long against the low of balance. It allows you to limit risk. Meaningful participation or acceptance outside of the area of balance, we go with those opportunities. And it looks like we've got a ways to go before we may get either of those opportunities. Here's the 30-minute chart. Overnight inventory opening here, currently here, maybe a little bit on the shortish side. Is the market going to accept value and range from yesterday, or will it reject range and value from yesterday? So I think we're at a kind of a pivotal level here, right where we've opened up. Looks like we kind of left the opening range at the low of the session, which gives us again an opportunity to limit risk. We just finished the opening range. It is 26 ticks wide, and we've taken out the high of it now. So if we are going to leave the opening range at the low of the session and look for prices higher, we've got a little bit of space up here. We've got some potential repair up to here and more repair up to our weekly kickoff high / this naked point of control up here. So if we do reject range and value from yesterday, these are a couple of decent targets for us to look at on a move to the upside. I would think that it would take more than just traders adjusting inventories to create a move like this. And again, we are right in the middle of the area of balance. So got to stay patient, look for the right opportunities. And again, in my time frame, looking at the daily and the 30-minute and the profiles, my best opportunities for a bigger trade are going to be at those extremes. Take a look at the NASDAQ now. Good morning, Bear Goes Long. Dan Trader, good morning. Captain Price. Yep, no major news today. Tom, my brother's here. Good to see you, buddy. All right. So here's the NASDAQ. We had a decent pullback. The market, I think, has been a little bit more buoyant than the S&Ps. We did add 2,500 contracts on Friday with the inability to take out the previous week's or the previous week's low, last week's low now in play. Got lots of information, lots of data down here along these lows because it's the lower extreme of the area of balance that we're kind of focusing on here. So we added 2,500 in open interest. Was that new shorts? We had a little bit higher volume, so it kind of looks like we've kind of trapped maybe some shorts here. We've seen some sellers coming down here trying to see if we can get price to continue lower. They've been met by buyers. As long as these buyers remain, it's going to be a difficult spot for us to get down through weekly kickoff low. Here's the 30-minute chart. Hang on a second. All right. So very similar to the S&Ps. We had our bull flag, which did not perform well. Okay, took us back down below. Now it looks like that trend line, which was resistance, may be holding support, at least for now. It did not, however, on Friday. We just kind of ranged around it, settled kind of close to it, right? Now we've got overnight inventory pretty much just flat, inside range, inside value, right at settlement. Stay patient. There's going to be a better trade location than anything we're seeing right now. We're right in the middle of the overnight range. Last week's range low is here. Weekly kickoff low, very close to that. I would be, if I was going to be looking for bigger opportunities, certainly remaining patient. As again, we're opening basically right where we finished on Friday, right in the middle of value. Very little change in the perception of value of a NASDAQ. The wily NASDAQ is very difficult to catch. But here we are. I mean, the truth is, do we see anything really important for us to do here? I don't. So I'm going to stay patient. Here's the TPO chart. I think we only had 4 out of 7 of our markets here leave one extreme of the initial balance, and this is one of them. So, the excess that we're seeing at these lows is saying that price is kind of getting too cheap there. Sellers don't want to sell it anymore. Buyers have taken over. And even with the rejection of the late spike on Thursday into Friday, we weren't able to continue price to the downside. We have a normal variation trading day, neutral in stance, small increase in open interest, nothing tremendous, but nothing to not notice either. If you look at this, the market opened and traded here, By the end of the day, it traded up here. It seems to me that that open interest may have been new longs coming in that just didn't have enough oomph to push the market higher, or maybe they didn't want to. Our overnight low, overnight high, inside Friday's regular trading hour range, inside value. Stay patient. Stay patient, Tiago. Here's gold. I've been kind of pondering why gold has not been moving higher as the dollar moves lower. It's been the opposite. Well, Friday we had, I think kind of an interesting trading day. We lost 1,300 in open interest. Long liquidation, is that what that is telling us? Market broke out below this area of balance, did find some continuation, but seems to be struggling to the downside now. All right. Well, finally, maybe we're going to see some upside movement in gold. The longer time frame, unlike the daily or the weekly chart, is higher. Medium time frame, obviously, we can see it as lower. The short time frame is also lower. Take a look on this 30-minute chart. So short time frame lower. We finally put up a higher high and a higher low on Friday. Here we are. Overnight inventory, maybe a little bit long, but again, there's very little change to the value of an ounce of gold. We're in range, we're in value. Stay patient. I know it sounds boring, but a lot of trading is boring. There's a lot of waiting and a lot of wondering. And I'm just where we are, even in the short time frame, we're in a consolidation. I don't see any reason to jump into anything here just yet in gold. We'll be looking for some extremes, maybe. The low, the point of control from Thursday might be an interesting opportunity. Last week's low could be an interesting opportunity. Just don't see anything that's screaming to me, hey, you better pay attention. Look at the TPO charts. B shape, B shape. Long liquidation. Friday's long liquidation is supported by a loss in open interest. If there was an increase in open interest on a day like this, I would start to think we've trapped a bunch of shorts down here. But it would still could be the situation. We've got, excess low, excess high, low excess low excess low. We're here in the middle of volume value. We're above TPO value, which there's something to be said for that. We had not a confident profile on Thursday on the way down. We left a couple of anomalies that were rechecked on Friday. So, I don't think that there's any lack of confidence to go revisit down below price. We'll see if we can maybe hold value, TPO value high here. It gives us the opportunity, right? It gives us the opportunity to limit risk. All right, here's the euro. So while the dollar has been creeping to the downside, the euro has been creeping to the upside. What we might think that gold would do as well, but no, it didn't. What do we do about that? Well, on the weekly chart here in the euro, it's very range bound. I can show you here. Here's the euro weekly. Range. There is, a higher high, higher low, but overall, it's relatively range bound. And again, that's the weekly chart. Daily almost looks like the same, right? Here's the weekly chart on the daily. So what are we doing? Well, we're right in the middle of that range. Last week's high and low really kind of have now put in kind of new extremes of the area of balance that we're currently in, and we're centrally located. Says patience, right? Says patience. Here's the 30. The dollar was getting whacked. There was some other a British number that came out. I can't remember what it was, but market. I think we talked about this on Friday. As we opened with a gap on Friday, and we just looked at this and said, this thing could just get hung over all day, and it's kind of what it did. Overnight inventory we have to the long side. We've opened with a gap. And there's a lot of potential repair and structure above here with the gap, with the naked point of control. It wouldn't surprise me for the market to kind of drift in that direction. We did have a breakout of a bull flag, which provided decent daytime frame opportunity, but didn't get any continuation. We've traded all the way to the other extreme of the channel. We're now back above the extreme of that channel, which might be an interesting opportunity for us as well. Here's the TPO chart. Let's take a quick look at that. IB extreme, no. Normal variation day, yes. Prominent point of control, yes. Narrow range, yes. So here's the gap. Here's the point of control that we would look to maybe check into from last Thursday. There's a little bit of repair that could be repaired up here as well. As long as we don't close the gap, I'm thinking I want to look for longs to see if we can't get up here and take out these points of control above here. You got to keep your eye, of course, on the dollar in that regard. Tenure. All I can say, I have it on my notes here, written in really big letters, is balance. Still really just defined extremes, which makes it easier to do what we should be doing here, and that's trading range bound rules. Sell the upper extreme, buy the lower extreme until proven wrong, and it just keeps getting more and more solid as far as where those extremes are. We added 9,800 in open interest on Friday off the low. That's not a very big number for the 10-year. I mean, it's a 4.5 million in open interest out there. So 9,800 open interest increase doesn't say that much. Tested to our extreme high in the overnight. I'm just going to be looking for those extremes. Here's the 30-minute chart. Here's our overnight check up to our upper extreme, which is in essence last week's high, which is this pink line up here. Overnight inventory is holding to the long side. If we can't maintain price up here or higher, it makes sense that this market is going to roll over and come back to where the overnight started, which is down here. It's a sweet little opportunity up here before the open here on that 7 o'clock bar to get that close to our upper extreme. Here's the TPO chart. Balance, 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 balance. Week low, week high, double distribution trend day. Again, kind of heavy at the bottom. Which indicates we may have trapped some sellers here. It's a little bit different than we were looking at here. If it was in the euro, we were looking at this in a similar fashion. But we did it. We may have trapped some shorts down here in short time frame. Okay. What about the natural gas, the Widowmaker here? All right. Rollover blur is in full glory here. We lost 5,800 in open interest on Friday. Now, in a move like this, I would be looking for more of an increase in open interest, and the fact that we broke out of the area that we were in balance, and we left a late spike at the end of the day as well. But that late spike, maybe it was created by shorts getting out of those shorts into the weekend. But it doesn't change the fact that we've got a late spike here at the end of the day. Here's our late spike. Settlement is up here. Overnight inventory was a little bit short here, and the market's showing some difficulty in finding acceptance inside value. It did open in it, but now seems to be rejecting it. What this market is doing is on the TPO chart, it's easier to see. Here's that late spike. Okay, when we open in or above a late spike, the market is indicating that it is probable that it is going to be accepting higher pricing. We've opened flat out above it. That's the highest probability of higher pricing. Doesn't mean price can't come back down to test the base of the spike or this base of the spike before returning to move to the upside. So be careful with this. Sometimes the late spike brings obvious opportunity. Sometimes it's a little bit more challenging to be patient enough to get the best trade location based on what's going on in and around the late spike. Yesterday, Friday, IB was the low, double distribution trend day with a late spike and a decrease in open interest. That's just a function of rollover. We could have actually increased open interest in the time frame that matters with this late spike to the upside. Anything can and usually will happen. All right. So, let's take our time getting into the trading day today. The last thing we want to do is get all biffed up at the beginning of the week here. So opportunities are coming. These are opportunity making machines. Stay patient, look for the right opportunities. Again, I look forward to seeing you all for group coaching today. We'll have Make Hope Money directly after that, within about a half an hour after it. But as soon as I can get things ready, we'll take a look and see what we can see late in the session today. Looking forward to seeing you all later. Have a great session. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. You start to get emotional or upset, you're compromising your decision-making process. Step away, clear that venom before coming back into the markets. If you're not centered, you're not going to make anything beautiful. Got to be centered to make something beautiful. Have a great day, and we'll see you later.